Welcome to Money Confessions. If you're trying to get your finances in order but have not had any success, this video is for you. I'm here to discuss common money mistakes and talk about ways for you to overcome them. I'll explore different strategies, tips, and hacks to take your financial game to the next level. From car debt to budgeting to credit card debt, investing, and pursuing your dreams without breaking the bank, Money Confessions is your gateway to informed decision making. By the end of this episode, you'll have gained knowledge and confidence to tackle your own financial journey and be ahead of 99% of people. I'm not here to sell you on a get rich scheme either. Instead, I'll provide practical advice tailored to all individuals striving for financial success. Let's dive in. Confession number 1: pay off car loan or put lump sum towards student loans. With the new ruling, I'm trying to plan out what I'm going to do with my various loans. I have a $5,000 car loan at 3.5%. I have $122,000 in federal loans at varying rates from 4.3 to 7.6%. I have no other debt. I feel relatively comfortable financially and have saved about $55,000. I want to make an approximate $30,000 lump sum payment on my student loans, but I was also trying to determine if it would make sense to pay off my car loan in full and put the amount of my monthly car payment towards my student loans, or continue to pay down both by making minimum payments for both and putting extra towards my student loans if I can. Well, a lot of people would tell you to pay the highest interest rate loan first and do the avalanche method. I think honestly, in this instance, I would prefer going the snowball method. You have $5,000 left on your car payment, so I would like to get that just free and clear out of the way and then be putting that additional money towards the student loans and then just start attacking the student loans as quickly as possible. I mean, you have $55,000 saved up, pay off the car payment tomorrow, and you can put $40,000 away attacking these student loans immediately before interest starts accruing on it. And then you need to really just get a budget in place and start attacking the rest of these. And you'd have about $80,000 in student loans remaining. Frankly, I would not feel comfortable financially with $120,000 in student loans. Pay off the car loan, start attacking the student loans with $40,000. Confession number 2: stupid to buy a house. Hey everyone, I'm 27 and single, and I've been saving up for a house down payment, and I will have met my goal of 25% down by the end of 2023 on a $350,000 house. However, I've had a training opportunity that will take me out of my city temporarily for 2 or 3 years. It comes with a temporary raise, but I still cannot afford to comfortably buy in this more expensive city. My salary is currently $110,000, but will be $175,000 for this 2 to 3 years. I'm debating buying a house in my current city, even though I won't be living there for at least 2 or 3 years, and then renting it out until my training opportunity is done and I decide where I want to be long term. I've done some analysis and I think I can break even on my rental in my market. But I'm mainly concerned about locking in 2023 prices because housing will probably continue to go up due to lack of supply, and don't mind losing a bit because I do feel the area will continue to appreciate. Is this a terrible idea? My first question would be, if you did not live in this city currently, would you buy a rental property there? You think you might break even on this rental property? That's not a way you should run rental properties. You need to make sure you're accounting for maintenance, for capital expenditures, for vacancy, for management fees, for all these different fees and costs that are going to come up, because breaking even at first glance, back of the napkin math, you're not going to be breaking even. You're going to be losing money when a water pipe breaks, or you have to switch management companies to a more expensive one, or a new tax bill comes due and taxes have gone up over the last year. So you never want to be breaking even on a rental property. That's not a good way to run rental properties at all. If I was in your shoes, I would keep renting. Don't get in a rush buying a house in an area that you're not even going to live in. Start saving as much money as possible. And then when you settle down in 2 or 3 years, I mean, your income's going up $60,000. Try to keep your expenses low when you're moving to this other more expensive city and save as much cash as possible. You've already done a great job saving up a lot of money for a down payment on a house right now. Put that in a high yield savings account and continue to stack cash for the next 2 or 3 years. Then you can have options on where you want to live. Confession number 3: buying a house at 18 and 23. Hi, me and my boyfriend are looking to buy a house together through a loan, of course, preferably FHA. I understand you shouldn't buy a house with someone you aren't married to, but we're both mature enough to handle whatever happens if things go south. We've been looking at apartments, but the area I live in is a tourist area and prices are crazy. I also feel as though the monthly payment on my loan and rent would be about the same. His credit score is currently 710 and increasing with his car payment he keeps up with. He earns around $600 to $700 a week. I don't have a credit score yet because I never got around to it. I earn $400 to $500 a week with $50,000 saved. Would it be a good idea to at least apply for a loan and see how much we get approved for? We've been looking at this $200,000 house for a little while now, but just procrastinating the idea of actually pursuing it. I don't know how long you've been together, but you're young, you're 18 years old, and your boyfriend's 23. You should not be buying a house with someone that you're not married to or engaged to. That can just go south very quickly. I know you said we're both mature enough to handle whatever happens if things go south. But those are famous last words of people who are in the same exact situation. So I would avoid this at all costs. Buying a house at 18 years old with your boyfriend who's 23, someone I'm not married to, that's just a recipe for disaster. With your income only making $400, $500 a week, and you have $50,000 saved, you're doing a phenomenal job saving a lot of money. So I would continue to save as much money as possible for when you want to buy a home, when y'all get engaged, when you get married, or if one of you decides to buy a home and the other pays rent. But right now, I would not be buying a house together. Confession number 4, pay off credit card debt. I'm looking for advice on my personal financial situation. I've racked up $9,500 of debt on one of my credit cards. In my personal savings, I have just under $20,000. I use this account for bills and emergency savings. I do not have any other accounts besides for my 401k and minimal HSA. For the last couple of years, I've moved my credit card debt back and forth between credit cards, taking advantage of the balance transfer, months of free interest. Student loans are coming due again, and my student loan bill will be similar to my credit card bill, and I'm thinking I should just pay it off and be done with it so that I have room in my budget for student loans versus investing that money. You're correct. In this situation, you should pay off your credit card debt yesterday. You have $20,000 sitting there. I know it is interest free in theory with the balance transfers, but having $9,500 of credit card debt overlooming you when you might miss a payment and interest start accruing, that's a terrible spot to be in. You want to clear this off immediately and yes, open up that cash flow because student loans are coming due quickly again. And you make sure that you're sitting down, getting on a budget, only spending the money that you have. But there's no world that you should be accumulating $10,000 in credit card debt just because it is an interest-free balance. So pay this off and start figuring out a plan for attacking your student loans. Confession number 5, what debt to pay off? Selling our condo to get a good start on a down payment for a house. We plan on taking some of this money to also pay off some debt, and I'm trying to figure out what to pay off. I currently have 2 personal loans left. Here are the loan details. Loan 1 monthly payment is $478 with an interest rate of 23.9%. The total owed is $13,271.31. Loan 2 has a monthly payment of $234 with an interest rate of 5.75%. The total owed is $10,014.71. What should I do? Well, with your condo being sold, whatever proceeds you have from there, you need to make sure you're accounting for taxes for capital gains on that. And then 2, pay off the loan 1 immediately with the proceeds. 23% interest rate will kill you with that rate. And if there's anything else left over after you pay off that $13,000, honestly, you should go pay off the second one as well. I mean, that's also at a 5.75% interest rate. That is not a low interest rate either. Your money in your high yield savings account that you'd be keeping for a house down payment is not going to be above 6%. So pay off both these loans with the proceeds and start figuring out a plan to start saving more money in the future. I mean, that's going to free up about $700 in monthly cash flow if you just start saving every single month. There's my dog Benjamin in the background, as you can see, moving around right there. I'll introduce him at the end of the show. Confession number 6, what to do, save or pay debt. Let's say you have enough to pay off both your car loans, both rates around 5.5%, or you can continue to save using your high yield savings account with a rate of 4.5%. If you do this, you'll be able to pay off your mortgage completely in 5 years. That is at a 6.1% interest rate. And in that time, your cars will be mostly paid off. And in the meantime, you'd have a bunch of liquid cash, but maybe crunched on your monthly spending. What would you do? If you have enough cash to pay off both your car loans today, I would do it. Car loans are, in my opinion, never a good idea to have. I don't know what the amount of these car loans are, but percent interest rates, I don't want to get those paid off immediately. And I would attack those prior to the mortgage. I mean, that would be going the snowball method in terms of debts that you have. Pay off the smallest loans first, which is your car loans, and then going after your mortgage after that. I mean, that's going to open up a lot of cash flow for you to start saving that money to go start paying towards your mortgage if you want to pay off your mortgage. And I would start attacking that too, being at 6.1%. So pay off your car loans immediately and then start using those monthly payments to be paying down your mortgage even quicker. Confession number 7, paying off loans all at once or keep the money to earn interest. I'm having trouble to find the answer for my situation. I'm 31 years old, single, and I make $80,000 a year. I have student loans of $50,000 with an interest rate ranging from 3.4 to 6.8%. Currently, I have enough money saved up in my high yield savings account to pay off the loan in full. And I also have 1 year's worth of emergency fund that I can rely on in case I lose my job. My monthly expenses amount to be about $2,000 a month. Does it make sense to consolidate my loan so I can get a lower interest rate and pay monthly while taking advantage of my high yield savings account interest rate, 4% as of right now, or just pay it off, the $50,000 at once? Any advice? You would feel amazing being debt-free tomorrow. If you have the cash, the $50,000 to pay off these student loans tomorrow, and you never have to think about the interest start accruing come September. You wouldn't have to think about ever paying these again. Wouldn't have to think about the money coming out of your bank account. I would pay these off tomorrow. Your high yield savings account with the interest rate of 4% is not going to be at the 6.8% rate that you have on your student loans for some of those. So you have an amazing emergency fund built up with a year of expenses. So I would immediately pay off the student loans and keep that emergency fund and start figuring out, okay, now there's extra cash flow. Where can I be investing this, putting this in index funds and building for long-term wealth? Confession number 8, advice for my auto loan. I'm 20 years old and I just financed a car with CarMax. It was $17,000 with a 20% interest rate. Yes, I know it's wild. I put down a $2,000 down payment, but I'm young and my credit is 680 and I just got my credit card not too long ago. So I haven't had credit long enough, but I was in need of a car. I tried to refinance, but I couldn't due to the fact that the car value was lower than the loan. I don't want to pay $400 a month in payments because it's all going towards my interest and not towards my actual car. What should I do? I mean, your options are very limited at this point. You try to refinance it and the car value is already lower than the loan amount. So your options are sell that car, take out a small loan for the difference, personal loan for the difference of the car. If it's $1,000, $2,000, and then go get another car that's $5,000 or $8,000, so you have a much smaller loan. You could also try local credit unions as well. But besides that, your only other option is to get after it. You need to start cutting your expenses. You need to start throwing all the money you can possible at this car payment because 20% interest rate on a car loan will eat you alive. Confession number 9. Should I pay off my car loan and borrow for home renovation or vice versa? I want to put about $50,000 of work into my house to do some minor updating to the kitchen, the living room, and primary bedroom. I had the cash on hand to pay for it in full. Additionally, I have a car payment that has about $45,000 left on it. I've been paying almost double the amount every month and had planned on paying off early about a year and a half from now. The interest on the loan is 5.4%. Should I use my cash to pay off the car and then borrow money for the home renovations at 0% for 18 months? I have an offer to transfer a balance to my credit card and get 0% for 18 months. I guess in other words, instead of sending what I would normally send to my car payment, I could send for the home renovation and stop paying the 5.4% interest. To me, it sounds like a win-win. I am still in debt for the same amount, but I'll be paying 0% and will hopefully get some minor return on the home value from the renovations. Am I missing something? Any downsides? You're playing a dangerous game here if you're going to be taking out $50,000 in loans or in debt to renovate your house. Whether it's a HELOC, whether it's put on credit cards, whether it's however other way you can take out debt to renovate a house. If you're taking out a loan to renovate your house for unneeded renovations, for updating your kitchen, your bathroom, or anything in between, this is a terrible idea. You don't have the cash to pay for it, you shouldn't pay for it. And currently you're in debt. You're $45,000 in debt, so you can't afford to pay for the renovations because you should be paying off your car debt first. So pay off your car debt. You should not be making $50,000 in renovations for fund your house when you have $45,000 in car debt. So pay it off tomorrow. Start saving up again for cash for what you want to do on the house. But please, please, please do not take out debt. Do not transfer debt from the car loan to a credit card. Think and hope that, okay, this is okay because it has 18 months interest free when you don't have the cash to pay for it currently. You can end in a spot 18 months from now that, hey, an emergency came up. Maybe the pipe in a house broke or the AC went out or whatever it might be, and you start accruing more debt or the money that you thought would be going towards paying off this credit card before the interest started accruing is gone because of instances that happen in the house. So please, please, please only spend money on the house that you've paid up in cash after you've paid off all your debt. Well, everyone, well, thank you for watching Money Confessions today. My goal is to help the world learn about money, talk about money, and better your financial situation. This is my dog, Benjamin Franklin. Yes, his name is Benjamin Franklin. He's 9 years old. He's a Vizsla, and he wants you to like and subscribe as well. So, Ben, look at the camera and tell him to like and subscribe. Look, right here. This is Benjamin Franklin. Like and subscribe. Thank you.